Well, what do we have here? We see the bonds bouncing. We see the SPY making new highs alongside the bonds bouncing. July was a bullish month, blah, blah, blah. In today's video, we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, why I think the market is going to make a pullback, and we're going to take a look at the dollar and the bonds. All right, so without further ado, let's get started with the video. Number one, nice and simple. We're looking at the dollar. All right, so the dollar has an inverse relationship to the market. Means it goes opposite. So if the dollar is falling, that means that the overall market is doing well. That means that the stock market is bullish. So currently we see that the dollar is very overextended to the downside right now. And it looks like tomorrow we're going to open outside of the lower level of the Bollinger Band on the dollar, which means that the dollar should bounce. I'm assuming that the dollar is going to bounce. Now, if the dollar bounces, that means that the stock market is going to fall. So that's number one, okay? Number two, so first of all, right, the dollar, it looks like we're about to bounce on the dollar. The stock market should be falling based off of that information, okay? Number two, the Russell 2000 is in the stratosphere over here. It's just hanging out in the rocket, in the stars, no care in the world. It's like a California girl on vacation somewhere in, I don't even know, like in a different country. No care in the world. Just, oh my God, no idea what is going on around it. But this is the IWM for us right now. All right. So very simply, we are short currently on the SPY and on the IWM. I am assuming that the IWM is going to get a pullback. And the reason for it is because we've seen time and time again on the S&P 500, the NASDAQ, and the Russell, when we are trading this far outside of the standard deviation, because that's what the Bollinger Band is. The Bollinger Band is a standard deviation away from the 20 exponential moving average. So when we are very overextended outside of the upper or the lower standard deviation away from that level, then we get a reversion to the mean. So that would mean that the IWM gets a pullback. So that is why we're currently short on the IWM as well. Okay. Now, very simply, also, this is a chart of the S&P 500. The S&P 500 is also in the stratosphere. It looks completely alone and it just completely skyrocketed. Moves like this do not sustain themselves. We saw before. Remember when we saw Tesla made a huge move to the upside, looked like it was about to, it blew through all levels of resistance. It looked so bullish. What did I say? It was not a bullish time. When moves like this happen, they are not sustainable. They should not be buy opportunities, guys. So especially when the dollar is still falling, when it looks like it's about to bounce, when the Russell is already in the stratosphere, moves like that cannot sustain themselves. And if they do, it is what it is. We're taking our shot at the downside. I was saying how regardless, this is not an automatic reason to just be completely bearish on the market, blah, 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 blah. But this is 100%, guys. This is not a time to be long. If you do want to go long, it's lotto long. It's very, very light position long. It is not the time to become aggressively bullish. Never, ever, ever become aggressively bullish when something like this ends up happening. Please, because it's just, there's so many reasons not to be very, very bullish. And especially not when there's a big move to the upside like this. SPY made a big move a few weeks ago. What happened the next day? We just ended up falling lower. We got everyone to become very, very bullish, ended up falling lower afterwards. So enough has happened. The SPY has already been rising alongside the bonds. We were looking at how the bonds were going to give a bounce. I was talking about how the bonds were going to give a bounce, and that would lead to the SPY and the overall market also getting some strength. We were leaning long the overall market. Now today and heading into tomorrow, I have my bear glasses on. I am looking for levels of resistance to go short. No ifs, ands, or buts. I am not bullish. I am bearish on these setups, on specifically the S&P 500 and the Russell. Because of the dollar, the bonds can continue rising. That's completely fine. if the bonds have another huge green day and the SPY ends up pulling back, those are buying opportunities on the SPY, in my opinion, regardless. And we were looking at seasonality for July. We were looking at how July is 2.2% percentage gain on average over the past 20 years. July has a 2.2% gain. So it's the second best performing month in the year on the S&P 500 over the past 20 years. So just very simply, guys, this is what it is. There's not really too much else to look at. Crude oil, crude oil is another huge, guys, there's just so much. There's so many different things that are completely overextended. The XOP could have went short. The XOP, honestly, the industrials, I mean, so what was interesting though is sorry, I wanted to start like, so Nvidia, for example, and like the really like bullish setups. I wanted to so this is just like for food of thought. All right, so things that gave like very, very bullish setups while the rest of the market is most likely going to get a pullback. I'm very interested to see how these stocks perform. Nvidia, I'm interested to see how AMD performs. It's going to be interesting. So I really, really want to see how they perform alongside the market. So I'm going to be taking a look at these big winners. If the market is red, I want to see how these guys do. All right, so just food for thought. And yeah, hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning for the live stream. Thank you. Take care.